This is a podcast from BFM 89.9, the business station.
BFM 89.9. Good morning. You are listening to The Morning Run. It's 7:06 a.m. on Tuesday, the 16th of July. I'm Shazana Mokhtar with Wong Xiaoning and Keith Kam. First, we are going to recap how global markets closed overnight.
It was another green day for Wall Street. The Dow Jones was up 0.5%, hitting a new all-time high. The S&P 500 was up 0.3%, and the Nasdaq was up 0.4%. In Asia, Japan's Nikkei was closed. It was Marine Day holiday yesterday. In Hong Kong, the Hang Seng was down 1.5%. Shanghai's Composite Index, as well as Singapore's STI, closed 0.1% higher. Back home, the FBM KLCI, not a bad jump actually, 0.7%, closing at 1,630 points.
All right. For more analysis on what's moving international markets, we have on the line with us Michelle Schneider, Chief Strategist at Market Gauge. Mish, good morning. Thanks very much for joining us. We have to talk about what happened on Saturday. The shooting of former U.S. President Donald Trump has raised his odds of winning back the White House. How do you think a Trump win could impact financial markets? Should we be expecting a stronger U.S. dollar and a steepening of U.S. Treasury curves?
Well, let's separate. First of all, good morning. Thank you for having me on. But let's separate that into two categories. The category of what the market did today in response to the possibility, I should say the higher possibility of a Trump win. And by the way, he did announce his VP candidate later on, J.D. Vance, and we can mention some of his policies as well. And then what was already happening in the market before this. So as far as a Trump presidency, the presupposition is that A, he would lower taxes. And certainly that's something that every American likes to hear, but it doesn't necessarily mean A, will come to fruition, and B, will be a benefit to all Americans, and C, that it will even happen. Because one thing we have learned about Trump in the past is that, like all politicians, they will react to whatever's happening in the headlines to A, calm nerves of the markets, B, calm nerves of their constituents, and C, to basically try to fix whatever problems emerge. And we know there are plenty of problems around. So as far as the taxes go, we really have to look at the inflation conversation. And I don't think either candidate really is dealing with the inflation. As far as oil and gas, everybody thought under Biden administration, alternative energy would do amazing, oil and gas would do horribly. But of course, we know the geopolitical situation, and OPEC actually flipped that around, and that oil and gas has become the big move this year in the whole energy space, and alternative energy has been terrible. Would that continue with Trump? Very possibly, maybe even more so, because he's a big advocate for more drilling. As far as tariffs in China, Biden has done tariffs in China, but so will Trump, possibly even greater, but we don't know that for a fact. I think one of the big differences has been the big outpouring for Bitcoin and crypto, and J.D. Vance is also a big proponent of that. And as far as I'm concerned, I think Bitcoin was basically consolidating for a run anyway. Maybe it just got expedited a little bit with this news. Again, that is something that's running on its own fumes, but that could actually help with a Trump presidency. As far as the dollar, J.D. Vance has come out in support of a lower dollar to promote more exports from the U.S. I'm not really sure where people are hearing that Trump would be in favor of a stronger dollar, because, as a real estate maven, one thing in real estate, you want a weaker dollar. So I'd say the bigger problem he's going to have with the dollar is if he creates more stress with some of the countries that have been promoting more of a BRICS type of situation. And then as far as everything else, will remain to be seen. But what we saw today was, yes, we saw these things moving around, but I don't think, except for maybe further destruction in the old energy space and not even that big a move in the oil and gas space, we really know what's going to happen. And I think monetary policy is going to be the thing that rules.
Michelle, I was just wondering, politics is really fluid. How much of what has happened with markets shooting up this much is just a knee-jerk reaction suggesting a more severe consolidation could be in the offing?
Well, right. You just basically pointed out what I was trying to say, which is, politics have a knee-jerk reaction, and certainly that's what we saw today. I'd say probably the biggest thing, besides the Bitcoin move, was that the Truth Social stock went up a lot today. But overall, it's going to be whether or not how the economy does and what the Fed monetary policy is. And are we right now in some period of consolidation? Is the market getting ready to sell off? Has this rotation to small caps become real? What's going to happen here? And the yield curve, which was in the very beginning question, we haven't talked about yet, but that steepening has started even before today in the market. And some people will tell you that steepening means that they're expecting economic growth. And some will tell you that the steepening happened right before 2000, right before 2008. And usually it's like right before a recession happened. So I don't think we know. But what we do know right now is that we saw NASDAQ come off a little bit more from its highs, even though it rallied today. It hasn't taken out the highs it made last week. We saw the Russells continue into ascent, but it's still not even close to where it was right before the sell-off in January of 2022. And the market is very, very frothy right here. And from a seasonal standpoint, very often July 17th, 2 days from now in the United States, is a peak. And we're entering a second half of a year that will be guaranteed very volatile. So I would be prepared for pretty much anything.
So does this then mean it might be wise to take some money off the table?
I always think it's wise to take money off the table. I mean, we at Market Gauge and I personally have been trading for 4 decades. And I don't think we have ever regretted especially when we have really good profits, taking some money off the table. And we have formulas for that. So yes, and I would particularly watch the next couple of days, because if NASDAQ starts unraveling a little bit more, we have a Fed meeting coming up as well. We have earnings season with such frothy expectations. I mean, unbelievable expectations. Any of those things can create maybe even a 20% decline. Some people say that. It sounds so outrageous, but it really isn't when you think about historically what could happen in August. Yeah, take some money off the table. Leave some money on if you have good money in there, and be ready to put money to work when we know better what's going to happen from here in the next 48 hours.
And do you think this earnings season will give us some clues in terms of where to put our money to work? So far, some of the big financials have reported. What's the mood like? What do you think the tone has been set?
Well, I think the tone is, obviously the financials have done well now for the last couple of quarters, the banks, largely because of the amount of investment money that they're making. So that's a big part of it. But does that necessarily reflect? So I think what you really have to look at is, clearly we know that the big gun companies like Apple or NVIDIA, now they're saying can go into the trillions in terms of market cap. These companies are doing okay, and they're buying back their own stocks. So I don't know if we're getting the clearest picture there. So I think you have to look at the small cap and the mid cap stocks, especially the ones that have had good balance sheets to date. And if they report well with an outlook for the third and fourth quarters in next year, continuing to do well in spite of the interest rates where they've been, in spite of the higher costs, with some sticky inflation, particularly with freight costs, et cetera, then I would say you want to put your money to work in those areas. That would probably be where I would go. Otherwise, I still think commodities are hot, and I still think the precious metals have room to go, and including potentially some of the industrial metals. And I wouldn't take my eye off the energy space either.
Mish, while we have you on the line, can we take a look over at China? We see their second quarter GDP rise 4.7% on year. That missed expectations of an over 5% growth target. Main drag was retail sales, which was up 2% on year versus a forecast of 3.3%. What does this disappointing number tell you about the challenges faced by China?
Well, again, I mentioned in the very beginning that the tariffs are pretty much popular with either candidate. Well, I shouldn't call President Biden a candidate, but whether he wins again, or Trump. And so that's been a pressure. I mean, we know the EVs, they put tremendous tariffs on, and so did Europe. So that's hurting them to a degree. But I don't worry too much about China because, yes, the numbers that you mentioned were not great, but there were a couple of areas that were good. Industrial growth actually rose a little bit. The fixed asset investments remained sort of flat, and unemployment numbers at 5% remained flat. So at this point now, I think that this again was a reaction not only to the numbers from China, but maybe an overreaction to the prospect of a Trump administration. And it could actually turn out to be more of a buy opportunity because I still think China has a very long range plan.
What Chinese stocks would you be a buyer of?
Well, I was in Alibaba, I should say our company was in Alibaba and we got out and we made money and we've been standing aside and we did not buy this last rally last week. I don't know if that was just prescient or luck or what. Now we have an opportunity potentially to get back into that. So I would look at that. I would look at Pinduoduo. That still looks pretty decent. And if you want to play it more generally, where you have an exposure to tech, but some of the other areas of China's economy as well, FXI, the ETF, also looks pretty good. It corrected, but it corrected right into support.
Mish, thank you so much for speaking with us. That was Michelle Schneider, Chief Strategist at Market Gauge, giving us her take on some of the trends that she sees moving markets in the days and weeks ahead.